Hi there. Have you been wanting to do more multifamily passive deals but haven't known where to find them? Have you been hoping to get into your first deal but haven't found a deal that looks compelling? Well, in this video, we're going to talk about increasing the number of deals that you find and prepare on how to actually invest in one. So the first thing I wanted to say about this topic is that when it comes to getting into more deals and even seeing more deals, the first thing you really need to think about is deal flow is really the most important thing. What I mean by that is being able to see more and more deals. You want to be able to see a lot of deals because if you see a lot of deals, you're going to be able to recognize what a good deal looks like. Because if you just see one deal, you don't really know what to reference it by. But if you looked at 20 deals or 100 deals, you're gonna be like, oh, I can kind of evaluate this based on how it looks like with the other deals. So deal flow is really important. In fact, I know a guy who's invested currently in over 70 deals. That's 70 deals. That's a lot of deals. And basically what he spends a lot of his time doing is networking. And that's the first thing I would tell you is spend time networking with people, because you're going to learn. When I say networking, I mean you're going to network with other passive investors. You're going to find people that have been doing this for a while. You're going to say, hey, who should I talk with? Who should I set up a call with? Is there anybody you can introduce me to? Going to live meetup events, going to talk with other investors, getting on Google and doing searches, listening to podcasts, and trying to hunt down different people that are doing deals. And basically, typically how it works is you'll schedule a call with them. You'll identify an operator who's been doing deals. You'll have a call with them, and you'll get on their list. And basically in those calls, what you want to do is you want to ask hard questions. You want to get into, well, what does it look like when people invest with you? A question I just really love asking is, what's gone wrong on a deal? What's something that did not go according to plan? And if you have a call with an investing group or you're connecting with them and they can't answer that question, or they kind of hem and haw, or they seem awkward, that's a red flag for me, because they should be able to say, hey, this happened. This didn't get, we learned from this, we would do this differently, and this is something, and these are the range of our investments. Most of them perform this way. We had this one that did not perform as well. But those are people typically that are gonna be more open and honest when it comes to communicating when things don't go according to plan. Because some deals go great, some don't go as well, but even the range of those deals, they tend to be much better than looking at other investments like the stock market. So, but the goal of really all of this is you're gonna be looking to find different groups to invest with, and typically end up with 2 to 3 different operators that you like to work with and really develop that relationship with, so that when they have a new deal, you kind of know that, oh, these are guys that I know. I already know this group. I don't have to do a lot of diligence because I've already worked with them. I've had great experience. I've worked with them on this deal. So over time, maybe you've invested with 3 or 4 or 5 or 6 different groups, but you're going to narrow it down to 2 or 3 just to make it easier so that you don't have to continue to do that work again. So, again, when you're on that call with the group, you're going to basically ask to talk with other investors and say, hey, can you give me any references? You're going to ask what their focus is for their business, what's their business plan, what do they do, and what are their minimums? Typically, some minimums are $25,000, some are $50,000, some are $100,000 or more. So you want to find out that as well. So that's the first thing, is deal flow. And then once you're on these lists, the next thing that's going to happen is you're going to be presented a deal. At some point, they're going to say, hey, we've got a new deal. And it's important that you pay attention, because these deals typically move pretty fast. It's usually pretty quiet about 95% of the time. Then all of a sudden there's a deal, and sometimes those deals can just fill up very quickly. So it's important to, if you can watch the webinar live, try to watch it live. If you can't, try to watch it very quickly. We had a recent deal, we typically fill in a couple days. The last deal filled in 24 hours, $8 million was raised very quickly. And so it's important that you really engage in that process if you are interested. I've watched people that were interested and they just didn't take action, and they got to it too late. So it's important just to get a good look at the deal first, ask questions, get in and do it. So that's important. The last thing that I would say that's really important when you're preparing to look at a deal and preparing to invest is really to determine how you're going to invest. And the reason that's important is that you could say, hey, it's a great deal, but you don't have the money in the right account, and just being available when it's time to invest is really important. So if you're going to invest in a cash account, is that money just kind of sitting in an account ready to go? I would start investing in multifamily and had money in a nationally known bank, and they said, oh, you have a limit of 10,000, or I think it was 225,000 for the day, and I wanted to put obviously more than that. So I had to work with the sponsors. Hey, can I put this in over a couple days? So it's something just to understand with your bank. Some banks have a rule that if you go in, they'll let you wire more money than if you just did it online. So that's something to kind of figure out and talk with your bank about that. So cash accounts typically are the most simple, and you do get those tax benefits from that as well. Some people, you may prefer to invest with a self-directed IRA or something called a QRP. Now, in this case, you don't get the tax benefits. Obviously, it is a tax-deferred account already, so you don't get additional tax benefits. So sometimes the cash accounts can be better for those reasons, but also there are people that have a lot of money, and you may have a lot of money in a retirement account, and a lot of sponsors will take that. So a couple considerations to consider it comes to looking at a retirement account. You cannot use your typical, Vanguard, Charles Schwab, these type of traditional self-directed IRAs. You have to be in an IRA that allows for real estate investment. So that's the first thing you have to kind of consider when doing that. And then also there's sometimes a long process. They don't give you checkbook control. So checkbook control is the most desirable type of retirement account, because literally you can say, I want to invest in this and I'm going to wire the money, and I make that decision. QRP allows you to do that. Most retirement kind of self-directed IRAs don't. They have one person, you fill out this form, they send it over here, they send it back here. It can take sometimes a week or two. It can take a while. Sometimes it can take a couple days, sometimes it can take a while. So it can be challenging to work with. So having that checkbook control can be really great. The second thing is really, there's something called UBIT, which is unrelated business income tax. And the short story of this is basically inside of your IRA, the IRS can tax you at normal tax rates based on the amount of debt that the property took on. So real quick example, if you invest $100,000 into a deal and you doubled the money in 5 years, but 70% of the property was financed, then they can tax you on 70% of your gain. So it's $70,000. So that could cost you between $20,000 and $30,000 worth of taxes inside of your IRA. So it's really important that if you're going to do this, to try to get into a different type of account. A great account, if you're interested in learning more about this, if you go to bronsonequity.com, go in the resource tab, something called a QRP. You can basically learn a little more about it there, or you can schedule a call. It's really great. So it costs a little money to set up, but once you set it up, there's no UBIT, there's none of the unrelated business income taxes, and you have checkbook control. So I highly recommend that. So really kind of to wrap this up is that relationships with operators are very important, doing your diligence and being ready to invest. And that's really how you can actually get in more multifamily deals. I'd love to know what you think about this video. Go ahead and shoot me an email, bronson@bronsonequity.com. You can also download a free report that I wrote about investing during and after a pandemic, comparing the stock market to multifamily real estate. That's at bronsonequity.com/report. Or if you're interested in doing deals, we're continually doing deals. Go to bronsonequity.com and you can join our investor club. Thanks for taking the time. We look forward to seeing you on the next video. Well, hey there, before you go, make sure you like this video and subscribe to this channel so you can get new content as soon as it's available. Also, check out this free report I wrote about investing during and after a pandemic, comparing the stock market to real estate and other investments. You can check out the next video here.